Welcome to On with Origence, the podcast where credit union leaders explore the ideas shaping the future of lending and technology. This episode is part of a special series recorded live at Lending Tech Live, Origence's annual lending and technology conference. We brought these sessions to you so the conversations that energize the room don't stay in the room. Let's get into it.
We're excited to introduce a brand new segment this year at Lending Tech Live. It's a live taping of the On with Origence podcast happening right here on the stage. It's going to be hosted by David Adams, Senior Vice President, Embedded Finance Sales at Origence. And this live recorded conversation is designed to keep the big ideas from today going and going deeper. So joining David at the desk, we've got Brian Bender, GM of Partner Solutions at Alloy, our titanium sponsor. Jayson, Amandus, VP of Indirect Lending at my home credit union, BECU. Right. Nice to have you. And we've got Bob Child, COO of Origence. So an all-star panel. We're going to kick it over to David at the On with Origence news desk. Let's give him a round of applause.
Welcome to On with Origence. This episode is called Beyond the Headlines, Translating the Economic Outlook into Credit Union Strategy. I'm going to open up the question today. Lindsey, you just painted the economic picture to us. In this environment right now, is it more a threat or an opportunity for credit unions?
I think both. I think there's a lot of challenges, as we just talked about, out into the marketplace to understand the health of the consumer, health of the businesses. There's a lot of, I think, pressure right now building. There's a lot of unknowns and uncertainty. That being said, there's still a lot of opportunities for growth and investment, particularly on the technology side. And we're seeing that's where capital flows are heavily going. So I would say both. I think it's important to not throw the baby out with the bathwater.
And Bob, I'm gonna ask you, just as our brave COO here, maybe take a position.
I agree with Lindsey from that perspective. Different viewpoints. From a lending perspective, the SAR historically for new cars is 17 million. We were at 16.3 last year. All the forecasts are coming down to 15.8 for this year. There was things that moved the market for car lending last year. We saw the push to buy cars before tariffs came in. Then we saw the push to buy EVs before the incentives went away. We came into January thinking that there would be at least 2 rate reductions. That is not happening. And so new cars are really at a disadvantage right now. With that said, bread and butter of credit unions is used car financing and lending, and that is in high demand. And so credit union relationships with their dealers to get cars back to dealers and to finance used cars is a tremendous opportunity. And I think that balance sheet management, as we get more deposits in, is the positive also.
I just think, Brian, to continue the question.
I look at things from a fraud perspective, as Alloy is an identity and fraud risk management platform. And 2 takeaways from Lindsey's talk. First, Lindsey, you showed some slides about the adoption of AI tools for our companies to reduce costs. We think of fraudsters as being extremely well funded, almost venture capital-like organizations. And they are adopting AI and AI tools in order to reduce their costs and increase their set of opportunities. And so I think that same trend that companies are experiencing today is also resulting in much wider and broader artificial intelligence attacks in fraud versus credit unions. I think that would be the first thing. The second thing I would say is that economic uncertainty is connected to fraud. And this would be both for a credit union and for an individual. I think my main takeaway was there are actually 2 pressures on buying big ticket items right now: increase in the actual cost of a new automobile, for instance, with the increase in inputs from energy. And I think the second input would be the higher cost of debt, given all the debt burdens that they would put those 2 things together. And that means that new auto loans and lending, or maybe mortgages, applications might be going down. And as a credit union, that might be because, hey, we want to get our applications up and things like that. And so there might be some marketing initiatives and things around that, incentives to get members to take out loans fraudsters are very attuned to that situation in that environment, and that actually would provide incentive for them to particularly target a credit union having special incentives. And then the last would be on consumers themselves. We talked about the consumer getting pressured from a few different angles: smaller bottles of shampoo, less spend for reduced budgets to increase gas costs and things like that. That also would increase pressure on those consumers to search out additional sorts of funding, whether it's a buy now, pay later loan or something like that, or even be more susceptible to scams for easy employment income or other sources of steady return, high return kind of investment. So I think that's the framework that we look at. And also that obviously, just to bring it back, is, really speaks to the need for credit unions to have an ongoing adaptable fraud prevention type platform approach.
Absolutely. And I'm going to come back to a question about that momentarily here. So our little gentleman from one of the biggest credit unions in the country, Jay, you got threat or opportunity?
Cautiously optimistic, Dave. I'd say. Cautious for everything that Lindsey had pointed out. The pressures on households, the metrics we see in delinquency, disposable income, household income. Optimistic because I think it's our bread and butter as a credit union, right? For us to kind of advocate for empathy for a lot of our members. So we're low fee providers. We usually have some pretty good rates focused on used cars, all things that are super important in today's environments. And even I'd say on the collection side, right, when we go into loss management, we use that empathy to work with people and partner on deferments. And as you even get into like repossession, talking about different ways we can work out, maybe payment plans instead of just going to, 90 days, taking the car like they would at a bank. Sure. So I think as a trade association, like we evangelize that in all of our conversations we have with our peers, but collectively we can kind of come together and really kind of lean in on that, I think, as an opportunity for credit unions.
Thank you. That is just a quick note. You actually know Lindsey from your banking school days.
Yeah. She was my economics instructor at BCU, so I hope I do her justice.
Thank you. Just a question here. I'm going to kind of go down the panel here, and then Lindsey, I want you to react to these gentlemen's answers here. So give me one specific decision that you've made in the last 12 months, or maybe will make after listening to Lindsey, that you wouldn't have made 2 years ago, just driven directly by this economic uncertainty in the environment that we're in today. So Bob, I'll start with you. Maybe talk about Origence or just what you're seeing in the markets.
Talking about Origence, you heard from Tony this morning. We are putting AI not only in our products, but in our back offices. It is changing how we function. Mentioned in the previous thing, as a manager, we're looking down the road where you may manage 2 employees, but you may also now manage 2 AI agents. So it's going to be a different world out there. So that would be my one thing. I wanted to come back to one other thing though, Dave. We were talking about a little bit of a concern that's out there. More and more consumers are rolling debt from the previous car into the new car. And that's a personal balance sheet thing. At the same time, as Lindsey pointed out, you've got inflation, particularly with auto insurance. And so when we look at that monthly payment of the car, it's not just the car payment, but it's also the insurance and the ancillaries that go along with it, which is going up and putting the pinch onto consumers. We just saw this week that Navy Federal is going out to 84 months on their car loans, which is okay if consumers continue to change out of their cars every 26 months. And so I think that's the bet that we have to see is, will we see an improvement in this consumer balance sheet, just like the government balance sheet, which has not improved over time? And I think that's the thing to be cautious about.
Yeah, I think at Alloy, we're trying to help our credit union clients manage through these uncertainties, especially as it comes to fraud. And I think one of the things that we've really focused on as AI becomes such an attack vector in so many different ways is really focused on outcomes. How can we help our credit union members better serve their customers by reducing friction in the experience that they have, whether it's because they need to apply for a new 84-month car loan or some other service that they need, and applying the high risk using a lot of AI tools that have the full context of understanding a member's experience and their history at a credit union in order to enable them and putting friction where it needs to be put for suspicious behavior, and removing it where it doesn't, so the members have a better experience.
Jay.
Yeah, just to kind of add on to that, I think for us in general, it's just putting pressure on timelines. So timelines are being pulled forward, right? So we were looking at different ways to diversify products and services, like the importance of that monthly payment in a household today as further conversations in like leasing, extended terms, and also AI adoption, right? In order for us to stay relevant, to offer low rates, low fees, we got to drive down our OpEx too. We know that. And so things that we're like on our wish list in a couple of years, we're just pulling those forward as fast as we can. And some of that AI adoption is, I know everybody loves to talk AI and you can go through some fatigue, but it is a real thing. We're finding different ways, use cases to help drive down that OpEx as well for us.
I think we heard, Lindsey, you heard a variety of answers talking about just how Origence is deploying AI and managing staff to the tools that Alloy is putting in there to manage the consumer experience and then navigating this economy to what they're doing from a strategic plan here at BECU. So big variety of answers. Just your thoughts on your economic look at this.
Well, again, I think we do get fatigued talking about AI, and immediately the talking point is the efficiency gains and how effective this is to increase productivity. But we also have to understand that there is a fraud component in this. There is a displacement factor in this. And we need to be very aware and meticulous in how we adopt and implement AI into our core practices so that we can continue to serve customers, but also protect customers from what's out there. So there's a lot of different angles that I think we need to look at AI through. We can't just blindly adopt it and say, well, it's fantastic. But also, again, going back to the consumer, the health of the consumer, I do think we often look at the big ticket items just from the sticker price. But when we look at the cost of a car, not only is that increasing, but as I had that great chart up there, auto insurance is up 30, 40%. And the same for home purchases. Right. Prices are skyrocketing, but home insurance is also up 30, 40%. So you may be able to afford the ticket price, but can you put furniture in? Can you afford to heat the home, fill up the car with gasoline? So there's all these different inflationary pieces that are impacting consumers. And again, this is the health and the backbone of the economy and, of course, the credit union industry.
Lindsey, I was listening to one of your economic colleagues talking about just that auto insurance and just the price operating of vehicles actually driving some of the delinquency numbers. That's some analysis. So,
correct.
For sure.
Yeah.
I've only got just a couple of minutes. So Brian, Jay, I'm going to tag you with a question here. We talked about the economic insecurity, credit risk shifts, we talked about the fraud spikes. Just how are you building or buying just the capabilities to stay ahead of all these factors? So,
oh boy, where do we start? We only have 2 minutes. Man, there are a lot of options out there, right? So trying to find the right partners. I think fraud is a big component that we take a look at, that we need to solve for. We're actively solving for, getting better at. And really finding those people that want to partner with us. And like I kind of go back to that OpEx expense, like ways that we can really drive that number down to remain relevant and efficient, right? And so we're really looking to partner with people that can help us with that connectivity through systems, right? And also stay on top of how those systems connect and talk to each other, right? So building that API stack and be able to integrate with anybody and whoever we want to help us get to where we go. So
thank you. Maybe just in a minute there, Brian, what do you see in your customer base?
Yeah, I think what we see in our customer base is a real hunger in order to have these best-in-class outcome-based fraud solutions so that they can basically make sure that they're as protected as possible, especially when fraudsters perceive enterprise banks may have the best protections, and so they're looking for perceived weaknesses. And so that's really what we're seeing our credit union clients want, is that best-in-class solution that enables them to flexibly respond to different threats.
Well, thank you. We're just about out of time. So I want to thank you to our panelists here on the On with Origence podcast. Lindsey, Jay, Brian, Bob, thank you very much. I want to thank you to the audience out there. And this has been On with Origence.
That's a wrap on this episode of On with Origence. There are more conversations from Lending Tech Live in this series. Find them wherever you listen and subscribe so you don't miss one. Thanks for tuning in.